Hey gentlemen, Bitcoin dollar. Yes, we're looking at it. It's the Bitfinex platform, and look at that little fractal for the left shoulder, head and right shoulder. Generally not interested in calling reversals, so we didn't chase this one, but certainly made sure we weren't short, thankfully, especially when we got that squeeze with that low volatility upward grind, which illustrated that there was a drift to a critical key level that we'd drawn. That was in and around the 6387. We'd bounced in the funnel over here. In other words, the funnel had supported. Yes, so it had a falling wedge. Look at the grind lines. Nice little angle triangle for a left shoulder there into the falling wedge. You pumped out of it there. But it was quite grindy at first, had a bit of a little squeeze there, then worked its way up, started showing wicks, respecting that level, touching, falling back, pulling back, and then in came the pump. And it was very quickly to target. Basically, you made target right there. So that's pretty good. What does it mean for Bitcoin for now? Well, on the bigger time frame, we have another inverted head and shoulders. Let's scale that correctly so you can see what I'm talking about. That's it over there. There's the left shoulder. There's your big ass head, which I've also put in a flag like line as well there, like that. Dipped. Now this shoulder was bigger, which is one of the reasons why I wasn't ready to be too bullish about it, but it has somehow fixed that, despite being a bigger right shoulder, which doesn't invalidate the head and shoulders. It just means that you've still got some serious selling volume coming out down here, which was bigger than there. But instead of grinding up in a channel, this has been based out in a inverted head and shoulders, and this is a proper pump. So this is a ripper up to what will then become a very interesting and critical line here at the 6,700. And I'll say, well, once again, that's a very critical line for a number of reasons, because it was funneled resistance that resisted here after being broken very impulsively to the downside, resisted here, resisted there, resisted there, resisted there, knocked it back all the way down to the support in that funnel level there. So you're seeing this is a key move. What does this pattern want to do? It wants to cross that funnel to get a first real bullish invalidation of a bearish setup. Then you're straight into the overall setups funnel itself, with the shorts over here on the green line and the stop level that would see it as game over for the return for the downside setup. So all those crazy ass targets, which I said I'm a little bit circumspect about, because we'd lost already 70% on Bitcoin from 20,000 to 6,000. Right down at 1621, or even the ones at the second interim at 4,000, suddenly become invalidated at that level. That's the 7777. It'll be about 78 actually, just closer to 78. But there's a bit of work to be done. This is going to be hard yards because it was proven to be significant levels already before. But with this kind of momentum coming up, who knows? So there's one or two things. You just made a target, so I suspect a bit of rest and a bit of fizzle just before this line, because it's been a big line already before. So this would not be a good time to chase in. You should have been in on the sign of volume and the impulsive break over here. We shared that chart incidentally earlier. Wake up, you're bored. Why do you do that? Sleeping again. We shared the chart here just as I was breaking. There was a key line that could be a big move, and now of course you got a very quick performance to that inverted head and shoulder. So quite bullish for this time frame under review, but then all big challenges waiting to be jumped, but showing a fair amount of zip. Doesn't mean that the bear is necessarily over. As I've said, that's the invalidation level for the inverted, so some heavy fences to be jumped and muddy fields to be crossed, but nonetheless possible. So what about the others? The others. So you may recall we said, it's probably going to fail because Ethereum also is number 2 in the tank, was also looking a bit toppy over here. It was running out of time. We have time stops in our method. You can learn all about it read all about it, yep, go to www.themarketsniper.com. Not for everybody, but you can learn the method and you can see all about time stops and everything else that we do over performance bands and exciting fun stuff. But nonetheless, this was a failure for the upside and it was a fall out of the rising wedge. I've covered this before. It was on a grind line. It was funnel level, wedge level, everything. A look one way, go the other way candle. We knew that was the game up. That was probably meaning cryptos overall was going to bark to the downside, and they did. BTC had a similar rejection. So let's bring it up to present now. What's been going up to present? Note how it bounced around this key level of significance, key targets from previous times. First set up in an uptrend, makes a second interim, little wind up, pushes it home to target, just little dip, pushes it home to target, marginally higher high, and then the second stage Bitcoin pump came, boom, all the way up. And note how this has crossed bearish funnel. It was a bullish funnel at the time, but it was a bearish that it broke and fell to the downside instead of making its target. Now it's undoing that funnel, bit of a grindy line there, but for a bit, but pushing, and looks like it's getting on top of these key levels, and that will serve now as potential support for it. So you've got number one and number two performing rather nicely on inverted head and shoulders. We didn't draw the inverted head and shoulders. That's probably your neckline. You didn't really quite get a right shoulder. You got your left shoulder, you got a head. This was a first upside HVF. By the time you did this little dip, you're well away from this. So it's not a proper head and shoulder here at all. It was a little push, move and dip. So it's mainly about the first HVF in a new trend. What do you get? You get overperformance. You'll learn all about this in greater detail when you do a program. So you overperformed to the target and in fact you cleared that funnel. So that's 2 coins covered there for you that are showing some bullishness on the 45-minute and the hourly time frame. Remember also, Rome was not conquered in a day. You will not 100% invalidate a bearish setup simply in a day, but this was our big upside, massive overperformance. We called this one. There was a huge move, big overperformance bands could have got you out up top there. You'll learn about that. Downside, that performed to the downside, support on the funnel, resistance at the funnel, channel down. So that's the nature of the game for Ethereum. In this channeling down, you now have the first low that is not lower than the previous low. It's actually slightly higher, and you have an impulsive move that looks like it could threaten that high over there. That will be the end of that grind channeling down. That's Ethereum against the dollar. So if Ethereum against the dollar is doing that, Bitcoin will probably be showing recovery as well, because one relies on the other, and I'd say probably Ethereum more on Bitcoin than vice versa. So this could now start to look like very busy chart. You might say, yes, it is. Let's have a one that's maybe slightly less cluttered. No, these are all a little bit of other interesting things. Let's get a clean one. Or maybe let's try work with this. Who knows, it'll take a bit too long. So what we could argue is, and this is something I've thought a few times before, generally that's a lower low than that and that, but this momentum needs to kick on for the bear scenario and isn't showing there. We had a triggering event, we had a bear flag, and we had another triggering event, but we didn't have a real capitulation. Time is starting to run out. There is time for it to still touch here, turn around, fail in the funnel and absolutely spill. So you can't say for sure that the bear is over. It isn't necessarily. But if we look at other views, there seems to have been a lot of support in and around the 6,000s levels. After we ran this low one here, it killed the support and resistance traders who all shorted at the 5987. You never really went much lower for much longer. In the fives, you rallied into the rising wedge, you dipped, failed to make a new low. So maybe this could make a channel up and then it could still sell off, or it could get really buoyant and recover. What we do have though, left shoulder, head, right shoulder on the bigger time frames, and we've not had that super spill that you kind of needed like you had over here. And so for me, this breakout, especially after the 70%, has always been under some suspicion and remains so. And now we're actually seeing a little bit of life on the upside. This is just a single day though, and with all due respect, it doesn't change all that much yet, but if it persists, who knows. So one of the other perspective views that you could look at is, okay, so have we got a falling wedge squeeze? Now we are trimming the wick here and calling that slightly, we've got a line that's higher here than here, even though this traded lower, but it is a permissible technique. I call it wick trimming, kind of like every pubic mound needs a proper shave, and you've got to trim those wicks. Anyway, so I digress. Oh dear, I sense digression. Anyway, so that is a falling wedge. How does it tend to work? You might trend in the channel up to the other side here. Then you could have another dip but fail to make a low, and then you could smash it out. You don't go straight into just being a full-blown bull. Everyone like, oh, $38,000 by the end of the year. You're going to hear all those things coming out again, $50,000 all a year. People need to be calm. They need to look at gold and silver. I know it's not the same underlying market. I know it's 7x, in dog years and all of that. But you do not simply automatically go in 100% bull from a bear market. So this is all part of basing out, and still could be second stage bear, which you could be caught on. So far from walking away from the notion that it is bear, it's that tricky time when a lot of the downside is in. There could be little stages of downside, there could be stages of upside. That's going to be a bit of a argy-bargy and quite finely balanced. Each one will have a chance for a short while, and just when you start to think that's it, that's definitely a long, you get a spank to the downside, and then when you think that's it, it's definitely a bear, you get a pump to the upside, and this is called whiplash season. Welcome to whiplash season. We'll have to see. The periods in between trends might shorten, and you'll continue to be changing and chopping and changing, and it's tough. This is a place where people lose money. Trade small, trade rarely, be highly selective, and be very, very careful, because the trend is under suspicion, but still broadly for now bias bear. That's it from me. Whiplash season. Don't get bitten. Bye for now.